Welcome to Conveyancing Matters. Stu and I are delighted to welcome Russell Quirk back to the show. Welcome to Conveyancing Matters with Lorraine and Stu. Join us for a chat about all things property. So, welcome, Russ. Hello, Russell Quirk, the doyen of property and all things broadcasting. How the hell are you?
Yeah, very well, thanks. Thanks for having me back on, rather surprisingly and unexpectedly, but thanks anyway.
No, not at all. It's really lovely to see you. And how are you, Stu?
Yeah, I'm all very good. Yeah. Countdown for Christmas is on, isn't it?
Yes, it is. And of course, well, Russ is like an early Christmas gift for us, isn't he? Early Christmas gift for us and Conveyancing Matters.
Well, so some would say I'm the kind of property Grinch, wouldn't they?
Well, they probably would, to be fair, mate. They probably would. But let's talk about being a property Grinch then, Russ, because you come onto the show pretty regularly, and you always point out that there's lots of property forecasts banging about, which, quite frankly, are quite often wrong. So where are we at in general terms, Russ, with the 2023 property forecasting? What did we think would happen this year, and what's happened in general?
Well, it seemed at the beginning of 2023 that lots and lots of economists and forecasters, so-called property experts, including the Bank of England, Capital Economics, I think even the Office of Budget Responsibility. So those that we rely on, Lorraine, to be pretty accurate when it comes to what's going to happen. And then, of course, those forecasts make the media, don't they, for days and weeks. And those forecasts somehow become fact. Those forecasts 12 months ago ranged from a property market calamity, Armageddon, so a 35% property price drop in a year from certain idiots, frankly, all the way back to the more diluted and reasonable forecasting of doom, whereby certain parties said that there would be something like a 10% drop in values. And that was all touted as being inevitable. It was bound to happen. It's an absolute certainty that house prices would drop by, yes, between 10% and 35%. The reality, though, 12 months later, and I love it when these things are talked about, the reality is the housing market in value terms is down about 3%. So it has dropped in value, but only by a tiny little slither, only by a tad. I obviously, because I've got quite a gob on me, as you kind of alluded to.
No, won't have it said. We won't have that said on our show, Russ.
I said that the property market, buyers, sellers, and so on, would prove much more resilient than that. And that despite, economic turmoil, and of course, this was in the wake of the quasi-quatrain budget, which was in September 2022. I said that, yes, interest rates obviously are increasing as they were, although they've now plateaued. Inflation was a problem, hence interest rates were being increased by the Bank of England as a kind of, as a belated means of trying to stem that inflation problem, but that because a number of things were going to happen, which I think have turned out to be true. The market's much more resilient because you always have a number of non-discretionary buyers and sellers, so people that have to buy and sell. The fact that, yes, interest rates were at 5.25%, fixed rate mortgages went up from what we're used to, 2.5% to 3% over the last 4, 5, 6, 7 years, to the heady heights of between 5 and 6%. But my contention was, I think this is what was proven, was that, yes, that rate is obviously higher and not what we're used to, but actually in historic terms, it's a return to normality.
Well, that's absolutely the point. I mean, because we're all old enough to remember that stuff, aren't we, at the end of the day? And the obvious point was that, prices were always going to go down and interest rates were always going to go up. It was just a case of how much and when.
But also what happens is, Lorraine and Stu, is that what you need for house prices to drop, like they did, let's say in 2008-9, where they dropped by about 15 or 16%, or indeed at the beginning of the 1990s. Obviously, you need demand to dilute. So you need a reduction in demand, which actually the media are very, very good at orchestrating by way of kind of scaremongering and telling everybody that all this horrible stuff is going to happen. So kind of the reduction in demand kind of happens. But you also need a massive increase in supply, right? So, school economics tells us that if you get a reduction in demand and increase in supply, then prices will drop. But of course, what we have actually seen in 2023 is just a reduction in transactions by, a fair measure, by about 30%. What's actually happened is those sellers that have decided, I don't want to take 5% less for my property or 10% less for my property. I don't need to sell right now, so I'm not going to. Those transactions haven't happened, and therefore there's no metric by way of that kind of forced sale, that desperation to enable house prices to have to drop. The difference, and this is what I was trying to say at the beginning of this year, the difference between this economic situation and previous ones is that in 2008-9, we had almost a threat to the entire banking system on the planet, whereby we were going to see, and almost did see, economic meltdown. And of course, the situation that most people in property, whether it's estate agents or conveyancers, have talked about this being in comparison to was the early 90s. Now, the early 90s is when we saw interest rates at a truly high level, which was up to 15%. That was when people were handing their keys back to their banks and building societies because their mortgage genuinely had gone from 500 quid to £2,500 a month. So for all of those reasons and more, there has not been a crash in house prices, has there? And for those doom mongers, by the way, that are watching this, that now conveniently think, well, okay, I'll just move the goalposts. You know, a kind of broken clock is right twice a day. It's still not going to happen, and actually, it's definitely not going to happen in 2024 because what we've now seen is lower inflation, a plateauing of interest rates, and actually some really interesting and fairly positive economic news around GDP. So, for instance, sorry to rant on here, guys, but this contention that we're in recession, we're not. We are not in recession. We have not seen 2 consecutive quarters of GDP shrinkage. Actually, we are in GDP growth territory, not by much, but actually by more than a lot of European countries. So, although that's part of the Brexit argument there, just for a while. So anyway, wage growth up, GDP healthy-ish, inflation under control, and so on. All we've got to do now, guys, is fix our broken and ridiculous political system, and 2024 might look okay.
Yeah, straightforward, no problem. We'll have it done by lunchtime, mate. So, Stu, how have you found this year in comparison to maybe where we thought we were going to be? How have you found it?
So, I mean, I completely concur everything Russell's just said. For me, it was always going to be about supply and demand, and that was the different matrix that it appeared people weren't taking into consideration. And I also think on the back of COVID as well, people were valuing homes a lot more than maybe ever before. So bricks and mortar, the essence of it was so strong, and clients generally, they all, who doesn't want to buy a house? Now, everyone aspires to own property, don't they? Anybody that's young, wants to buy a house. Nobody really wants to rent, do they? And with the way the rental market is and costs of rent as well, offset against, a mortgage, it was never likely, I thought, to particularly dip. But what is undoubtedly the case is the volume of transactions that have gone down. And, just to sort of emphasize Russell's point on pricing, we do a lot of new build work. And I can remember back in sort of 2007, 8, 9, developers basically taking anything for property just to get that cash flow going. And that is the major difference now. They've all completely held firm. Everyone's held firm. And I think maybe more now with, people's knowledge of the market and general knowledge in general, you can just glean from the internet. Everyone knows that prices will come back. So if people thought prices were going to fall, what goes down always comes back up. So I never really thought this time around it may be as bad, but most definitely, the volume of transactions, has made a significant difference. And I don't think also maybe the back end of this year has been particularly great. And I think the rumours of another stamp duty cut in the autumn budget.
Yeah, that wasn't helpful, was it?
No, because I think people were holding on for that, and I think now the amount of time in between that and Christmas has probably meant people putting stuff off to the new year. So
Stu, you say everyone wants to buy property, and want to get out of renting, but I'm wondering the extent to which I don't think the full debacle of the Building Safety Act has yet played out in terms of its impact on the leasehold market, and I think that the government and indeed the opposition sort of posturing around we're going to abolish leasehold. I think I could see that as potentially being another problem in the property market in the coming year, because you know, because people, you know, flats, you know, and are the entry level sort of, you know, acquisition into the property market, aren't they? They're the route into the
Do we
property
think a
market.
lay person truly understands that and goes to buy
I think the
and then
point is,
doesn't because of it though?
the layperson might not, but once they get to their conveyancer, Stu, they may well. And I wonder, you know, given that the government in his wisdom said, well, we're going to abolish leasehold on houses, and they put forward a bill a week ago that didn't do that, is quite extraordinary. Oh, well, we'll do, you know, we'll do it as an amendment. We'll table an amendment. Really? This is the bill you wrote, guys. And I have absolutely no faith in them being able to actually produce a statute that's workable now, given the debacle of the Building Safety Act. But I just worry about this political posturing around, as I say, around leasehold more generally. I don't think, I agree, Stu, I don't think it's necessarily going to be, you know, the general public that will initially have a problem. But I suspect that when they get to their conveyancers, it might, because their conveyancers are going to have to say, look, guys, you know, there might be big changes here and we don't know what they are, and we don't know what your asset's going to be worth or going to look like in, you know, a year or two's time when we've legislated. That's, you know, I think that might be a concern. But on the issue of Building Safety Act, Russ, we saw you earlier in the year, you know, campaigning for a poor bunch of leaseholders. How's that going?
Yeah, no, that was quite some campaign. So yeah, you would have seen me with a placard in one hand and a megaphone in the other.
Yeah.
Not that I need a megaphone, some
Which I
would
was
say.
going to say, metaphorically, mate, is what you do pretty much every day, I would say. But
Yeah, that was the visual manifestation of my entire character.
exactly, of your entire career. On Look East.
It should be my profile photo everywhere, shouldn't it? On all my social media. Yeah, so that was, I mean, in a nutshell, that was a cladding issue that has now run on for years and years and years. Very complicated, actually, because the freehold company, or the owner that owns the freehold of that particular block of flats, went into administration some years ago. So therefore the administrator now looks after that block, a block that houses about 237 families. And of course, because they have not remediated the cladding, and because they are indirectly, or the company itself is indirectly owned by some Irish shareholders, actually the Irish government as shareholders, via a construction that is an entity that was set up to actually fix all the broken Irish banks, talking the financial crisis back in 2008-9. Anyway, a very, very complicated set of circumstances. The long and short of it is 237 occupiers, some of them tenants, some of them leaseholders, unable to get any joy whatsoever insofar as fixing both the cladding problems and also some structural problems at the mill at Ipswich. So I got involved to try and pressure the administrators into doing the right thing, given that there was a lot of money sloshing around because they sued the previous construction company for many, many millions of pounds. That money sat in a pot. There was also the question of Homes England money, because obviously, although the rules have changed about 150 times, thanks to Michael Gove, there was the possibility of some Homes England remediation money being available. Anyway, we are now many, many, many months on. I've got the local MP involved. We've written to Michael Gove and so on, and talking about, let me choose my words carefully here. I'm talking about, let's say, political lethargy. I think actually getting the MP involved has just made it worse. Rather than me thinking, well, he's an MP, he's connected, he's got a bit of clout. Hopefully now he's involved, he might be able to wave some wand and actually force the administrators into, you know, spending some of this money to remediate the cladding so that people can either sell their flats or remortgage them. Neither of those things have happened. And in fact, believe it or not, tomorrow, obviously I know this won't go out immediately, but tomorrow, early in December, I have another call with the MP for Ipswich to try and, frankly, re-explain to him what has happened, and actually what's going to happen if the freehold owning company that's in administration now goes into liquidation, which might happen. It means there's no money whatsoever then for all of the fire safety cover, so the waiting watch, the insurance, and so on, which, as I've tried to explain to many people in authority in this particular situation, including Ipswich Council, if the building is even more unsafe in the future in terms of there's no fire mitigation, they're all going to have to evacuate, aren't they? All 237 families. that's absolutely abhorrent and outrageous for that to have to happen, given that there's millions and millions of pounds sloshing around, but also where they're going to go. And why don't we, and look, I'm old fashioned in this respect, why don't we anticipate the problem and fix it before it happens, rather than what often happens in politics is you allow the problem to manifest itself and then scratch your heads going, oh, we need to house 237 people today. How are we going to do that? So
well, that's
you
the
can
classic
see,
point, though, Russ. I mean, and I reckon the reason that you've not had a lot of luck on the sort of, the political front is I genuinely do think that I know nothing about this and nothing about the particular individuals involved, but a politicians in politics has to involve a quick fix where people can look shiny and marvelous quickly. And I'm sorry, but the issue around cladding, building safety at the whole, there is no quick fix. We know that, and I just think that it's all in.
well, no, here, but Lorraine,
all,
here there is a quick fix. I introduced a
well,
buyer. About 4 months ago, I said, I found a buyer. The guys that bought the block next door and did the remediation and got everybody out of cladding jail, I introduced the same buyer. The buyer's made an offer, basically no money changing hands, but will take the liability completely. And the administrators, and look, again, I'll tread carefully here. Let's just say there's a little bit of money left in the pot that the administrator might have their eye on. And if they sell, they won't be able to realise that money. If they drag this out to liquidation, then that administrator can keep that money for fees. So dare I venture that perhaps the administrator has potentially, in a hypothetical situation, might be thinking, well, I'd rather have that money in fees than not have that money in fees, right? So there's self-interest here. But there is a solution. There is a quick fix. There's a magic bullet. And that's why I tried to get the MP involved to say, why don't you make them sell it to them? And then you look good as an MP, given that there's an election in 12 months' time. That would be good, wouldn't it? The administrator doesn't get another £1 million, but they've had £1.5 million in fees over the last 5 years anyway, so they've done okay. But ultimately, the people benefit from a new owner that has pledged to fix it all because he's got an associated site next door. So you would think, in commercial world, if the three of us were sitting in a boardroom right now with the problem in front of us, we would now agree in the next 5 minutes that that's the thing to do, right? And there's no trapdoors here, by the way. There's no tripwires. It really is as simple as that. But for the last 3 or 4 months, they've just sat there scratching their heads and unable to pull the trigger of what I have proposed as just the absolute perfect solution. It is ridiculous, and it's what typifies, I think, big business, property transactions, and politics all in one example, one micro example. It really is outrageous. And at the end of the day, it'll be the poor beleaguered tenants and leaseholders that, believe me, in the next 2 or 3 months, they're going to be out on the street. I mean, they really will. So anyone watching this in March, April 2024 that wants to poke their finger at me to say, well, why didn't you do more? I've really tried. I've pointed out exactly what's going to happen, what's going to go wrong. And I've given you the solution. What more can I do?
Well, I think the thing, though, Russ, is, and this is the thing that people miss around the Building Safety Act, apart from having paralysed a lot of leasehold transactions and made them pretty much unsaleable, unmortgageable. And if the Act didn't do it, then the lenders put the nail in that coffin, as Stu well knows. But the thing is, what the Act doesn't actually achieve is it doesn't actually make anybody put their hands in their pockets and pay. It's one thing to say, well, this is where the liability lies. If you can go through the Byzantine structures that enable us to establish that, assuming we get that far on a transaction, and most conveyancers still won't. But it still doesn't. It still doesn't make anybody, the big developers in particular, of course, put their hands in their pockets and actually pay.
You've got almost a circular firing squad going on, haven't you? So you've got the developers, the freeholders, and the insurance companies, and the government. So those 4 parties all kind of looking at each other, going, well, it's not my fault. And the next guy says, oh, it's not my fault. And the next guy says, it's not my fault. So, and they know that if they pull the trigger, they're dead. They're themselves. So none of them want to take responsibility. So they're all looking at the next person. And what it needs for government to do is just to be decisive and to say, I'm sorry, this won't be popular with X, but we believe that the liability and the responsibility lies here. So that's who's going to pay for it. Or it's a tripartite responsibility. It's the freeholder, the developer, and the insurance company. Do you know what? You're all going to cover the cost equally. Just honestly, government, they're not great at making decisions, and actually not very good at making good decisions, but at least make a decision here. I mean, Grenfell was 6 years ago, guys. 6 years ago.
I know.
There's apparently there's 500 blocks like this, 500 blocks that still haven't been remediated. It's an absolute disgrace.
And how are you finding the leasehold transactions, Stu? I know we talked about this a bit, and you've kind of, PCS has started to sort of dip its toe in the water a bit, but how are you finding that?
Well, I mean, we do act on Building Safety Act properties. There are a matrix of different sort of issues that go with it, but the main one, as you've alluded to, is of course the banks and whether they'll lend on it. But the problem, I suppose, in the comparable with the banks at the moment and government and everybody else that you might want to throw into the pot is that, again, they don't seem to be able to make a decision either, because you can report one thing to the bank on Monday and you can report the same thing to the bank on Tuesday and you get a completely different answer. And that is where this whole conundrum kind of just doesn't work, because we do it, but everything is on a complete case by case basis. You can't automate anything. Nothing is the same on a day-to-day basis. You've got to treat every single one completely different. Even at the moment, I think now with some banks that are happy to lend as long as you've got the landlord certificate, I think you can't even take that as gospel. Now you've got to repeat, just treat every single one as it is, report it to the bank and see what they say, because it's just such a moving goalpost. Every day it's different.
Yeah, it is. And I mean, well, and the landlord can serve another certificate. They always could.
Yeah.
If they miraculously find more costs that they weren't covered by an earlier one, then they've always had the opportunity to serve another one. So this idea that the landlord certificate was a one-off thing, has never been enshrined in the Act. But
again, you go back to the banks. The problem with it is always, isn't it, that you've got sort of one person making a policy or rule or something they're going to rely on, but actually the people you're reporting it to aren't those people, so they haven't
got much more idea. I actually
got no idea.
A while ago when I was locuming, I was covering the work of a decent lass. She was a good lass, and it was a Barclays leasehold pre-Building Safety Act, and I thought to myself, I don't know, I thought this residue feels a bit short, this lease residue, just because I've been doing it a long time. And I checked the file, and she had checked the lender's requirements. She'd checked Barclays requirements, and I looked and I thought, oh, do you know what? I don't know. And that was what their part 2 said. It was, it fell within those criteria. But when I was reporting something else, I reported that as well, and all hell broke loose. And they said, oh no, that's not our requirement. We need it to be this. I said, well, that's what your part 2 says. But it was quite extraordinary, and we eventually got it sorted. But so even somebody sort of saying, oh well, no, that doesn't agree. That's not what the part 2 should be saying. So even what's on the lender's handbook isn't always reliable.
I think also, going back to the building safety, I don't want to link on that one too much, but just the bigger things coming with the indemnity insurance renewals next year as well, because. Yeah. First time round, it was a bit fresh, so they weren't that interested. It was just a scrape of information on it. This time round, I suspect that the insurers will want to see numbers and so on and so forth, and that will make a big difference whether people then carry on acting, I suspect.
Yeah, I absolutely agree. But what this does highlight, and maybe segues into, Russ, is I think the thing that conveyancers haven't quite started to absorb yet, and that's the material information guff. So which is affecting guff, which is expecting
it's a bit disrespectful.
Affecting estate agents first, Russ, coming in sort of 3 stages, upfront information, but dressed up. But the sort of third part of the material information requirements really potentially, definitely sort of driving the agent's tanks onto the conveyancer's lawn. So where are we at with that, Russ? Tell us a little bit about it and your view, because I think your view is somewhat interesting, not necessarily what we'd expect.
Well, yeah, I think it's a commonsensical view, as all my views are, guys.
Obviously,
really.
Obviously.
Of course. So the National Trading Standards Authority, as such, who work famously from a tiny little broom cupboard in Wales somewhere. I mean, and I say that as a means of conveying the fact that they're very under-resourced, right? So James Munro runs that organisation. And I don't always agree with James, but I think what is true to say is that he does what he believes is the right thing for the policing of the estate agency industry, and also ultimately what's good for the consumer. So we have legislation that says estate agents now must provide more upfront information, which would seem to be rather commonsensical, that if you provide information at the beginning of a process, i.e. at listing, as the seller's agent, that then better informs the buyer. And then, I mean, wow, what if you could give that information to the purchaser's conveyancer? Ah, wow, at the beginning, rather than waiting 3 months for that information to come through on a property information questionnaire or from an authoritative source. So that's kind of enshrined. What wasn't clear, unfortunately, talking of legislation being poorly drafted, is what material upfront information is. So what does that mean? So what the trading standards guys have done now is to put into parts A, B, and C what that means. And part A was introduced first, which was basically price. As in, you can't say price on application, so you have to advertise with a proper price. The correct address. You can't pretend that I don't know, Maida Vale is kind of West Mayfair or whatever, and council tax band and so on. Parts B and C have just been introduced, and I forgive me for not knowing or not remembering all of the specific details that are in B and C, but basically it is much more around kind of tenure, and particularly in Part C, I would guess what you would call the tripwires around construction of the property, and information that relates specifically to anything that might make that buyer run a mile. So all of those things have now been introduced. What is interesting, I think, is that the day that the trade press started to talk about B and C being introduced, which then obviously puts a greater responsibility on agents to gather such information up front, and to convey that on their listing and therefore on Rightmove and on Zoopla. Almost entirely, the feedback I got on that day from estate agents in the industry was that they thought it was onerous and over obligatory, and it was crazy. And I will tell you basically this sums it up. One agent, is a very good friend of mine, said, "What a pain in the arse this is." And I genuinely thought, being an agent and being, I guess I wear many, many hats, being a commentator on property, being involved in prop tech, I've had my fair share of kind of investments in different things. So I kind of know my way around multiple aspects, I think, of the property sector. But looking at this in the round, particularly as an agent, I thought, no, hang on a sec, how can this not surely be embraced by agents? Yes, you've now got to ask a few more questions of the seller. The seller needs to give you some more information. So for instance, are there any covenants? Are there any things that we should be aware of as the agent? Is this an estranged sale where there are two people on the title, therefore two contract signatures needed, and one of them has disappeared, for instance? Now, this is stuff that is not rocket science, in that you would imagine that any buyer would want to know this information in order to make an informed purchase. But no, estate agents think it's a pain in the arse. But I think, and actually this was written about in Property Industry Eye by Gemma Young from Moverly recently, who said, look, you need to see this as an opportunity that if you provide upfront information that's clear and accurate, it will inevitably help inform buyers so that you get more motivated and certain buyers. But also, once that stuff is then handed over to the conveyancer, because you've short-circuited a lot of time, I mean, many, many weeks, obviously it's going to mean that the transaction time is shorter. Therefore, you get your money, your commission check as an agent quicker. But also, we all know that the longer a transaction goes on for, the more likely it is to fall through. So therefore, if the transaction is now 6 weeks long, notwithstanding chains, because of that upfront information, rather than 15 weeks, well, you've kind of less than halved your chance of that deal falling through. So you get your money quicker, you've got more chance of getting your money, and you actually end up with much happier buyers and sellers because there's no stumbling in the road 5, 6, 7, 8 weeks down the line where you realize that, oh, it's leasehold and the lease is there's only 49 years left on the lease. Oh, that's now a problem 3 months into the transaction, and so on. So I think that estate agents should embrace this. It's now a compulsion anyway. So rather than wriggling on the hook and trying to resist having to provide this information, just work out a process of doing it. There is also already prop tech as a solution. There are software solutions to help you with this. And so, if nothing else, agents, help yourselves to try and fix the broken home buying and selling process And yes, it does maybe bring buyers, sellers, conveyancers, and estate agents closer together. And I know agents and conveyancers don't like each other very much, but come on, this has to be the way forward. Can you imagine going and buying an investment? Let's say you bought a FTSE 250 tracker, or a load of shares, or a load of commodities, or indeed you went and bought a car like Stu does on a regular basis. You went and bought your Ferrari, and you went into Lancaster, Colchester, as he does on a regular basis, and you see this gleaming 458 Speciale. Would you just not bother looking at the logbook and the service history? Just go, no, I'll just have it and hope it's okay.
I can't have that, Russ. I mean, at the end of the day, this relies on, I think the big thing for me is what's been brought in is a series of A, B, and C, where C is probably should really stand for conveyancer, because that's a lot of the information that the conveyancer has to obtain, but crucially, and interpret. But if the starting point for this whole process is that the estate agent is expected to give us the proper price and the proper address, that says everything to me, because that's a pretty low starting point. So to be expecting the agent to do what the agent should have been doing for the last bloody millennia, and then saying, oh, but by the way, now let's, as part C, give all of the information that the conveyancer should be having and interpreting. I'm not saying that information shouldn't be made available earlier, but I think it, and I don't know, I really would be interested to get your view on this, Stu, but all of this prop tech, and you see these standard reports, Russ, we see it every day. Oh, we've got a report that can, pull the covenants across from the title into a written report. Well, so what? If you haven't got somebody who's qualified telling you what that means and the implication for them, or the planning problems, or what a breach of covenant might mean, or whatever, or all the bazillion other things that conveyancers deal with that are a bit more technical, quite frankly, then this is never ever going to work. And I
isn't just another example of where the two industries haven't got together and actually drawn the boundaries of, because it's clear, isn't it? I mean, I agree with both points, because it's absolute clear.
Are your buttocks smarting on that fence, Stu?
Nice splinters, obviously. Yeah. But it's obvious, it's clear that more information has to be given to a purchaser up front. I mean, we can't rely on the fact that they can withdraw from buying the property before exchange. I mean, it's ridiculous, isn't it? More information should be provided, but it's the balance of that information, isn't it? And I think it was Lorraine or Russ, I can't remember who said it, but it's the accuracy of that information as well. Yeah. And that's where the danger, I think, comes in. And Lorraine, you're quite right. You could be talking about covenants that, for example, might not be enforceable, or you could be talking about something where actually it's not necessarily a problem. It's how that information is interpreted that's my worry.
It is, and of course it's the conveyancers, Russ, and this has always been Stu and my beef, that are properly insured. So if something does go wrong and the public suffer loss, at the hands of negligent advice, well, at the end of the day, they're not going to lose out. So where's the liability going to lie here if if incorrect Section C material information has been punted out, that the buyers...
No, I guess, look, no one's saying that the conveyancer wouldn't have to check not just the accuracy of the information, but the fact it actually ticks the boxes. So, the stuff that's flagged up has been dealt with from a conveyancing process perspective. No one's saying that the conveyancer won't have to do that. It's just that it's the time that is saved in the gathering of that information that actually informs, not particularly the conveyancer, I suppose, but the buyer at the beginning, to go into this with eyes wide open. I get the feeling, do you mind me saying, guys, that you might be a bit concerned that this does fulfill my prophecy on this particular podcast a while ago, where I said estate agents will end up doing the conveyancing. I'd love that to happen, but I don't think it will happen, because look, you guys are, you are the experts in terms of responsibility and liability, hence the ridiculous cost of your PI insurance as an industry, frankly. I don't think that's ever going to change, but I don't think it matters who comes up with the information, as long as you guys rubber stamp it at the end. Does that mean lower fees for conveyancers? Actually, I really hope not. I really hope not, because you guys, I can't believe I'm saying this, the conveyancing industry has painted itself into a corner on fees anyway. You've allowed fees to be a shadow of what they should be, given the responsibility that you as a sector take. So, but at the same time, frankly, who gives a toss who gets the property information questionnaire from the seller, whether it's the agent or the lawyer? Who gives a
But
toss?
Russell, I don't think lawyers do think that at all, and I don't think they do give a toss where that form comes from. I think the worry is the way the information is used. I mean, I've spoken to estate agents about lease terms, for example, on numerous times, and we actually had two ends of the scale only last week, where an estate agent told a client there was a problem with the lease because it only had, and I think it was 87 years to run on this lease. It was a commercial buyer. Okay, he was buying for investment. He knew his beans, and the estate agent was really kicking off about this term. And we've had another one before again, where an estate agent, I think this might have been the week before, was actually talking about the term of the lease. It was something like 57, saying it was absolutely fine to go ahead with it. It's the way the information is used. That's going to be the problem, and where that then comes flying in at us when we have to go back in and say, actually, that's not right. You've been misinformed and blah, 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 blah. I think that's the bigger worry, not where the information comes from.
Well,
isn't it incredible
there is
that
an element. There is an element of sort of, age of the information, and people in all of this seem to forget. And I could go on about it for days, so I'm going to try not to, obviously. But people seem to forget that actually the seller's list, the seller's conveyancer, for example, actually has a responsibility to check the property information form and make sure it's right. Well, if that's been circulating for weeks, if not months before, and bandied about by everybody, and the thing is also what nobody seems to think, Stu and I see every day how terrible clients are at filling forms in. You see most property information forms are not filled in properly, and leasehold information forms even worse. And this is the cobblers that's going to be doing the rounds. That's kind of what concerns me. Now, I think what needs to happen, and Stu, you'll definitely have a view on this in the light of the product you've had for years, is if sellers and buyers can be persuaded to instruct their conveyancer earlier in the transaction, massive. I think that would be really, really important. And if the seller were to instruct their agent, their conveyancer on listing, big difference. I think that would make a massive difference. But Stu, you made this point off air, didn't you? That's just not what clients want to do.
It's not what estate agents want to do. I mean, going back to what I said off air, when HIPS got abolished, we set up a brand. We approached agents with the possibility of working together. Could they collect this information up front? Could they get the forms completed when the property is put on the market? And although we went and won their work, no problem whatsoever, zero actually wanted to go ahead and do that. No agent that we dealt with wanted to do that additional work. And maybe the education wasn't there and getting across the fact they would get their fees early. But
agents are terrible at doing stuff voluntarily. They're terrible at change. They're terrible at disruption. They like things to be the same that they've always been. But I'll let me just use as an example. And look, the minutiae of all this, who does what when, yes, I agree if the conveyancer was instructive for both parties, at an early stage, particularly the seller, obviously, in the first instance. That would all be great and good, but would the conveyancer actually really do anything? I think one of the problems actually is fees. Coming back to your fees, grabbing a seller by the scruff of the neck at listing and saying, oh, by the way, there's some upfront costs here. You're going to have to pay 300 quid. We want you to fill in these forms. We're going to grab the title. Oh, and by the way, we're going to do a search, which we're then going to sell to the buyer, like in true old-fashioned HIPS fashion. I think conveyancers and agents are worried about going to the seller of an £800,000 property and asking for 300 quid. Well, I would say to agents in particular, if that vendor of that £800,000 property doesn't want to pay 300 quid up front to sell their home at the beginning of the process, you have to question the integrity and the motivation of that seller in the first place. So it's a mindset. It is a mindset thing as much as anything else. But one quick example, I was in Florida last year talking to agents. And, they have they're what they call a no attorney state. I'm sure you know this. The agent issues the contract and everything else is covered by title insurance. And everything goes through in about 14 days.
Yeah, we actually spoke to somebody, didn't we, not that long ago, that was absolutely blasting that system. Numerous problems with it. But I mean, we could talk all day long about the different, different systems in different.
But we all need to help ourselves, is the thing, right? Whether it's agents, buyers, sellers, and conveyancers, work together. But look, there's the home buying and selling group, which has been in existence now for I sat on the first one, I think 6-7 years ago, which was supposed to sort of highlight the issues, find solutions, and also push the likes of the Law Society and the CLC and agents and conveyancers and land registry all together. And frankly, and I say this with no disrespect to the people that are now on that body, it's just not worked. It just hasn't happened. 6 years on, nothing's changed.
Well,
Nothing
it's
has changed.
interesting, Russ. We chatted to Kate Faulkner, who you know, OBE, and actually that chat will be going out fairly soon. And I, from the outside looking in, which is very much what I am, personally, I think it's too big. It's all that there's a lot of committees. So on the one hand, there is that, you know, they can genuinely say, look, we have a lot of cross industry representation, to be fair, but everything is a subcommittee. A lot of it is on a
it is. And let me just give you an example.
and so you're not, by de facto, you're not bringing Law Society, CLC together.
The first home buying and selling group I went to, there were about 8 of us. And it was a 2-hour meeting in Milton Keynes, me, Kate Faulkner, and a few others. And basically it was estate agents and conveyancers. By the third one, which was, let's say, I think they were quarterly. So let's say that was kind of 9 months later. There were so many people in the room. It was ridiculous. It took an hour to do the intros.
Well, it's no, I think it did. Is it north of 200 people now, Stu?
It's ridiculous.
Yeah.
Unwieldy. Anyway.
Well,
just quickly, right? Going back to the, you know, you could dress up. We could talk about upfront information. We could talk about all these different groups. People buy and sell properties at auction all the time. That system is not broken. I really sometimes think we're overcomplicating everything.
Yeah, I agree. Upfront packs.
Yeah, I mean, surely when people go and sell at auction, there's no problem paying the searches up top.
Yeah. But there are, again, there's
actually, well, as you know, in most auction contracts, the seller will actually bing off the cost of those onto the buyer. Exactly. And a lot of auction purchases are going to be cash purchases. I agree. I think people are just looking at this from the wrong angle. I think actually trying to hive off, you know, a big section of the sort of technical conveyancing side onto the agents who aren't regulated and, you know, because they keep knocking that into the long grass and lots of whom aren't properly trained. I just think it's a massively bad idea, and it's another recipe for problems, really. And I think it might.
But you know, there are solutions out there doing this, like Bamboo Auctions, Offer, OFFR. There's a bunch of lawyers actually in Newcastle called Home Sale Pack that are looking at this from the point of view of applying technology to upfront information, but to solve the problems that then comes from that upfront information. There are people doing this, but of course they need to get traction. They need to be seen, right? So they need to raise brand awareness and all the rest of it. And look, this isn't a plug for proper PR, my PR firm, but seriously, the awareness of these solutions, these products, from an agent's perspective and also buyers and sellers has to be raised. The solutions are actually there, and they're kind of a combination of all the things that we've been talking about here, but they need to be embraced by the industry. And unfortunately, estate agents in particular are the hardest, the most Luddite of people to sell to.
Well, I also think, again, Russ, from my perspective, again, from the outside looking in, because I see, you know, lots of different firms, you know, train loads of people, go into firms, locum, the whole 9 yards, really. And this is my Luddite view. But actually, you know, prop tech for its own sake, I don't think it's a good idea. Lots of prop tech companies come up with solutions for problems that conveyancers don't have, and I'm sure therefore they do the same for agents. But that you've just hit the nail on the head, and this has been my view for ages. It's actually not that prop tech is per se a bad thing. It's the fragmentation. It's the fact that you might have half a dozen prop tech organizations that do the same or nearly the same thing. And actually, when you've got people at the coalface, frankly, like agents and conveyancers, who really, frankly, don't have the time to look up, to just get, you know, another sales pitch from another prop tech organization, I don't think, you know, it's just not going to work. There's just too many products out there, which sounds ridiculous, but that's why these organizations aren't getting traction.
And it will have to be compelled. I'm afraid government will have to compel it. It's not going to happen voluntarily through the industry.
Well, and that's not on the agenda either yet. Well, we could talk for weeks, Russ, and frankly, we nearly have. But I don't think that we can probably conclude this conversation without mentioning you and the C word in the same sentence. But I wonder if
often people do that, actually. If people do mention the C word in my name, funny enough, right next to each other.
Mentioning you and the C word, I perhaps will leave you and Stu to paint the marvellous, beautiful, tender tableau that you painted for me off air. around where you had the conversation about you and, well, dare I say, and I'll leave it to you to tell our viewers if you want, where you actually had this conversation. So, Russ, dare I say quietly?
It was the Dorchester, of course.
Well,
it was
yeah.
at the Dorchester. Russ,
Yeah.
you and Conveyancing, Stu and the Dorchester, and where were you? ... Is this a metaphor?
Yeah, so it sounds very majestic, and the Dorchester is obviously, it's one of London's great institutions as a hotel. I happened to be there wandering around the toilets, and guess who I saw wandering around the toilets as well?
Extraordinary, extraordinary. As I say, gave me an image I didn't want, to be honest. But
yeah, and we stopped for way too long, lingering at the sink, not the urinals. To chat about the fact that I had come across an opportunity that had been offered to me to buy a conveyancing firm, in fact, a solicitor's practice. And I have to say, and you're going to really laugh at this, the fact that, yeah, I have spent, I think I've mentioned once or twice over the years that I don't have total faith in conveyancers. And
I don't know. Do you remember that, Stu? Do you remember?
I'm not sure about that. Maybe not once or twice. Maybe
no,
once.
I won't have it said. We won't have that said on Conveyancing.
You might have heard it somewhere. You might have read it somewhere that, you know, I think that conveyancers are largely kind of apathetic and ineffective and inefficient. Anyway, present company accepted, of course.
Obviously.
Anyway, my cousin and I, Anthony, were offered this opportunity, and I won't mention the name of the firm, but we did go to see them, and we started to have a conversation on the basis that wouldn't it be interesting from an outside perspective, so as agents and whatever sort of conveyancers, to think about actually purchasing a conveyancing or solicitor's practice. And so we did look into it, but I have to say, and you guys seriously have both been very helpful in terms of your advice and your introductions. It's probably too complex in terms of us being able to do it. Well, no, on the basis of the regulation that goes with how you can buy into and invest in a regulated practice. You know, I'm not talking about the conveyancing process per se, but in terms of, you know, how I'd say the biggest problem is, let's say Anthony and I were to buy a 60% share in ABC Conveyancers, and we would go through all of the checks, and that would kind of be the way to do it. The only way you get to a conveyancing entity, a firm that wants to sell you or has to sell you 60 or 70% of their business, their equity, is if they put their hands up and admit that things are going wrong. Now, back to the transactional thing that we talked about earlier, obviously transaction reduction is affecting agents and conveyancers in a similar way, in that there's less business, right? So you're billing less. But trying to get conveyancers to say, yeah, I've got a bit of a problem here. And by the way, I'm a great conveyancer, but maybe I'm not so good at marketing. I'm not so good at the P&L, or I'm not so good at people management. If there was a bit more honesty, a bit more kind of humility, I suppose, amongst conveyancers and solicitors doing conveyancing in terms of their plight, maybe we could get involved. But I can't see anybody knocking on my door saying, yeah, I'm in trouble, come and kind of buy a proportion of my business. So it's probably too complicated, but this is a problem. This is a problem. So what they call Tesco law that was enacted many, many years ago to allow, you know, mere muggles like me to come in and buy into the majesty of a legal practice. Whilst that is now possible from a legal perspective, it's not really practically possible. And that is a problem for industries like conveyancing, because actually I think you need new blood, you need innovation, you need a fresh pair of eyes. Although Stuart and I stood in the toilet, as I say, for far too long the other night, talking about, you know, the problems of conveyancing, though.
We did venture out the toilet. Let's make that clear. The whole conversation wasn't there all night.
I remember it being all night. But anyway,
that was in your dreams, Russ. That was in your dreams. Well, that was the Legal Services Act 2007 that you're referring to rather dully. But I think, you know, again, another massive conversation. I think probably, you know, the regulation, the difficulty, the issues around investing in law firms. I mean, Stu and I have said a similar thing for a long time. You know, the conveyancing process, the process of transferring a title from seller to buyer, that's never been the broken bit. It's everything else around it, Stu, that's built up over the last 20 years. That's what takes the time. That's what's got difficult. All of the regulation, you know, the ridiculous, you know, the regulatory burden, the due diligence, the AML, the cost, the professional indemnity insurance. They're the barriers, Stu, aren't they? As much as investment.
If it was a case of getting somebody literally to buy their property and that was the end of, it would be so easy. But yeah, you couple the regulators, the banks. You know, the banks have such a big part of it all now. and the indemnity insurers. You put all that in the pot, and it's just a matrix of snakes that you can't really unravel. It's horrid.
Matrix of misery. Well,
Yeah,
perhaps
it
on the matrix of misery line, that's perhaps a good place to.
I think also, but there have been lots of investment into law firms in the last 2 to 3 years. COVID, masses. I mean, I can never remember a period of difference whereby you look at the structure of a law firm, the amount of sort of joint capitalists now that own firms is massively increased to private ownership. Obviously Simplify have massively led the way on that one. But the recent
question of influence, though, obviously we'd want to have influence over the way that the business is run, which means you have to take a majority stake. So it gets complex. Not to interfere with the conveyancing process, but the business around conveyancing. I mean, and again, without breaching any confidentialities, the business that we went to look at had overheads of £550,000 a year. Within 10 minutes, we'd saved £150,000 just by looking at their P&L. So we'd say whatever that is as a percentage, about 28% of their overhead immediately.
Yeah.
Oh
no, well, and that's the thing, isn't it? Because lots of lawyers, they go into the business, they go into law to do law. They don't go in to do the business of law. And it's the same old thing. The further up the food chain you get, the more managerial and personnel management responsibility you have. But they're not skills that lawyers are given.
It's a different job. The same in an estate agency. You can be the best branch manager, the best lister in the county, in London or whatever. Doesn't mean that you're going to be great at running a business. They're different skills. And I suppose what I'm suggesting is that, and this is a very hard thing for everybody to do, is to know your strengths and weaknesses. And if your strength is, listing homes and getting them sold, why not leave the other stuff to somebody else that can look after the business side? The same in conveyancing. If your thing is either business development within conveyancing, as in bringing new clients in, or it's, speed and efficiency and, knowing you've never had a claim against you on your PI insurance, for instance, whatever those things are, leave the other stuff that's perhaps drifted in the wrong direction for years to other people that kind of know their stuff. That realization, that admission, I think would be very interesting indeed and very fruitful for a lot of estate agents, conveyancers, solicitors' practices, and so on.
Well, on that bombshell, Russ, thanks so much for joining us. We've talked for far longer than we thought we were going to, and taken in a whole load of interesting topics. And thanks very much for joining us, Eva. Can't believe we finished on the bombshell that you had actually thought about dipping your toe in the conveyancing pool.
Solving conveyancing.
Solving the whole of the conveyancing process. But
might take me a week, but solving it by Friday.
It's sorted, done. It'll be done by Christmas. But thanks so much for joining us, Russ, and we really hope to see you soon.
Thanks, guys.
Take care.